Hey guys, welcome back to the channel. Hey, today I want to talk about squirrels. Some of you may be wondering, what does squirrels have to do with Forex trading? But it is a thing. So we're going to talk about what is chasing squirrels, and then we're going to talk a little bit about why people do it, some of the psychology behind that. And then I really want to get into how to stop doing it. Traders that are new, traders that are intermediate. I know some professional traders that every once in a while they'll chase squirrels. So I want to give you some of my tips and my tricks that I used when I first started to get away from chasing the squirrels. So with that, guys, let's get this thing started. All right, guys. So chasing squirrels is simply just chasing one trade after the other to try to get that profit. That's, you get in one thing and it doesn't go the way you want it, so you instantly jump to another chart, look at it real quick, chase another one to get another, buy or sell, and maybe that one goes bad, so what that does is, first, you're in too much of a hurry. You're chasing. You're chasing wins and not really drawing charts up and doing your analysis the way you should be doing it. So that's basically what chasing squirrels is in a nutshell. But why people do that, when I first started, obviously, I didn't start with a very big account. I might start with $100 or something like that. So when I got into a trade and it went bad, and then I would instantly jump into another one, say, yep, there's the downtrend, and I got to do the downtrend, right? Here's a sell, or it's going to turn around. I just know it's going to turn around, so I'm going to put in that buy, and it keeps going. There's nothing really that told me that I was going to, that the chart was going to turn around. I just figured I would take it. So I again lost money because I didn't do my analysis. People do that because, especially when you first start out in trading, it's the fear of loss. The fear of losing your account, and you want to make that money. But fear of loss is that you're gonna lose that next big trade, right? You're going to miss out on that next big trade. And here's the thing about the market, guys. It's going to be there for a long, long time. So it's not like this is ending next week. Okay, so when you look and do your analysis, just understand that you have time, right? If you miss a setup, then it's okay. Wait for it and just catch the next setup in it. It's always going to make another setup. All right. So in that respect, it's a psychology thing. Expert traders, the first thing is, they don't trade for greed. They always trust their analysis. They always mark up a chart the way they do it. They use the tools that they have, the tools that they're comfortable with, and they mark up the chart. And then the second thing that they do, guys, is they're aware of the things that can happen in the Forex market. There's always uncertainties in the Forex market. So they're aware that those things can happen. And sometimes a trade just doesn't go your way, right? And also, you always have news, you have, political news, you have foreign news. Anything can happen. Anything can happen, and it has this year, right? We've all seen it. Good traders and great traders know how to react to that. They know how to, keep your emotion out of it. It's an ABC thing, right? It's just, you look at the chart, you draw up the chart, put in your trade. And if it doesn't meet those criteria, then it doesn't really matter. They also have a really good trading plan. Now, that's one of the things that I'll touch on a little later. They have a really good trading plan, and they go specifically by that trading plan. They have to have a certain markup. They have to have certain things happen on their charts. And when those things happen, then they get into the trade. If those things don't happen, according to their trading plan, they don't get in the trade. And that leads me to the last thing. Good traders and great traders know when to walk away from a trade. They know when to walk away from a setup. They know when to say, you know what? It's not me. It's just not the way I want it to be. Walk away for another day, right? So, you know, guys, with that, we're going to get into how to stop it next. So, I have a couple keys on how to stop that, and we'll go over those right now. Okay, guys. If that guy looks like you or has looked like you, then this video is probably going to help you, because I know I've been there, right? So here's the thing. Here's the three biggest things that I can think of when I first started that I used to really get me over that hump of chasing those squirrels, right? The first thing that I found that really helped me is I got a trading plan. And basically, my trading plan just laid out a specific set of rules. These things were going to happen before I got in or out of a trade. So, you know, those things might be a certain price. They might be a certain candle, you know, that happens. It might be a certain zone that it breaks or retests. The next thing that really helped me was really slowing down. Like I said earlier, the market's going to be here for a long time, right? I had to really teach myself how to slow down, analyze the chart, analyze what it's doing, all right? And then make my determination on whether or not I was going to make the trade. And then if I pulled the trigger on that, the third thing that really took the pressure off me was risk management. Setting a stop loss, setting a take profit, things of that nature. Learning how to do that, right? We'll cover that in another video. But risk management was one of the biggest things, because what happened is I would put the trade in, and then I really had to teach myself to walk away. I knew that it was, if my analysis was correct, it should hit take profit. If my analysis was not wrong or something happened and the market turned around, I knew that it was going to hit my stop loss. And I accepted that either way. You have to take the emotion out of trading, right? I know that's hard to do, but you have to take the emotion out of trading. Every 6 and 7 figure trader that I know has found a way for themselves to take the emotion out of trading. It just makes your life a whole lot easier, right? So, you know, all that being said, all of this will not happen for you overnight. These things take time to develop. Like I said, you know, some of the folks that work for us, that work with us, have been trading for years. I've been trading for a couple of years. It took me a while to get my emotions out of it. Another huge thing that you can do when you first start, or even when you want to try something new, or maybe you've had a couple bad trades and you don't think that, you know, what am I doing? Why is my analysis just garbage? I don't understand. Go back to a demo account, right? There's nothing wrong with going to a demo account. I use, and still to this day have, about 3 different demo accounts that I use for different strategies. I test different signals, things of that nature. At HYDRA, I know we use those constantly, because we test each strategy that we put out to you guys for at least 1 year in a demo account. So we know it works, right? So definitely have a demo account. If you don't have one, they're super easy to do. You can get one in MT4. You can get one through any of your brokers that you're using. And use a demo account. There's nothing wrong with that at all. So as a matter of fact, a lot of the times I tell brand new traders that are just starting out, at least 6 months of demo trading time. You got to have at least 6 months of demo. just so you know how everything even works, how it, how it operates, how even just how to take a trade. Use a demo account. Do not jump in there with a bunch of money. Never trade money that you can't lose. Okay, understand that. Do not put your next mortgage payment into your account saying, "Oh, I'm going to make $1 million." No, you're not. All right. Like I said, I started off with just $100, and the first couple times I lost that $100. That doesn't happen now. But when I first started, I can't even tell you how many accounts that I blew because I didn't have these fundamentals down until I was taught them. So take these and run with them. And let's go to the next thing. And maybe I'll pull up a chart for you guys and kind of show you some of the tools that I use. Especially when I first started, some of the tools that I use on TradeView that really, really helped me out. And it gave me a couple specific rules right off the bat that if it did not happen, I did not take the trade. It won more than it lost. It made me some money, but more than that, it taught me to go specifically by my trading plan. All right, these things had to happen, and if they did, I took the trade, and it got me into that pattern. So let's go to the chart real quick. Okay, guys, so here's a chart. EN, just normally because that's what I trade. I've made a living off EN. So when I first started out, there are 3 things that I used that really helped me determine whether or not to be in a trade. So first thing I'll tell you is that in an unpaid version of TradeView, I think you only get 3 indicators. Might be wrong about that, but I think it's only 3. This actually will only use 2. So the first thing that we're going to use is I always had a 50 EMA up here. You can go ahead and click on indicators. You can type in EMA. Right there is your moving average. Okay, when you click on it, it'll automatically load it in. I made my line blue. And what a 50 EMA is, guys, is it takes the price for the last 50 of these candles and averages it out. That's kind of how you get this, okay? And you remember in a previous video, I told you guys that I don't take buys below the 50, all right? And I don't take sells above the 50. None of this would be a sell. My sell would have been here, right? Because it is below the 50. Now, what I have this set up on, if you hover over 50 EMA and you click the gear, you can go to inputs and you can change that to whatever you want. But I have it at 50 and close, okay? Make it whatever color you wish. And then the other one I have is a Bollinger Band, all right? A lot of people don't use these. I do use these because it's simply, it's just a really good tool for me visually to see, if we're up at the top here, there tends to be the market tends to be more overbought as this gets up to the top of your Bollinger Bands, or the bottom it's oversold, right? So I use the Bollinger Bands. Same way, you can go up here and type in Bollinger Bands and use it. And this is what I use. I use the length of 50, close. The standard deviation is 2. The offset, I do run an offset. When you download this, this will be 0. But I do run a 2 offset, okay? All right. So I definitely use that. All right. And then down here, if you'll go up and type in TIH, you can come up here and just type in TIH. All right. It's right here. Trend indicator in histogram. All right. I use that, and here's the rules that I use. Okay. So, like I said, I never trade for a buy below the 50. Never do a sell when it's above the 50. I come down here to my TIH, and for instance, oh, no, sorry about that. For instance, when I come up here, I'm seeing, okay, price right here is above the 50. Okay, so I'm in buy territory, all right? My TIH didn't cross till right here. So one of my rules is it has to be above 50, right, for the buy. This has to be green and above my dotted line, okay, for me to take the trade. You can see that happened here, okay, on this candle. All right. So those are two of the three things that I personally used to get into my trade. The other third thing that I used, I hope you guys understood this, because if you'll go back and put these two things in and back test it, oh, it's money. So another thing that I always use, and if you go back to my videos, I forget which one, it's one of the first couple that I did, I tend to do diagonal support resistance zones a lot. Okay? So another thing that I'll use, like for instance, we'll come here, right? We drop below the 50 here. I was below my dotted line here, right? So there's two indicators saying, yep, it's time for the sell. And I had run my diagonal support resistance line here. Three things told me that I should get into for the sell here. Now understand that I would have gotten in the sell here, and this is current price as of today on the 27th of December. Current price is right here. Okay? So those three things that told me that have me in 92.3 pips of profit right now. Okay? You can see that it came above right here, but remember, I use three different indicators. It's below this, it's below my diagonal, so I'm not taking that, right? That is above here, okay? But that's okay because it dropped back below. So I'm not getting in this for a buy, and it's below my 50. So it's not telling me to get into a buy yet. I'm just riding this thing out. So I hope some of that helped you guys. Use some of that if you want to use it. So guys, with all that being said, I hope some of this helped you guys out. Make sure if you got value from this that you go ahead and hit like and subscribe to the channel. It's really going to help us give you further content. Got some really exciting stuff coming up for you guys. And, you know, spread the word for me. If you don't mind, go ahead and share the page and everything, but make sure you go ahead and subscribe to this bad boy. And guys, with that, happy trading days. Have a profitable 2021, and we'll see you in the new year. Bye-bye.